One of the ways we're explaining how HadePlatform has managed to outperform the S&P 500 by 250% on an annualized basis since 2015, and it carried that performance well before we started tracking it, is we're looking back on past investments that we've made and stocks that were components of the Hade portfolio, and we're looking at what it was that made it tick. Why did we buy it? What did we see in that type of stock, in that stock? We're not looking at stocks we currently own. You have to be a subscriber to access that and to get trade notifications when we buy something. But this is still a good exercise to let you understand what it is that we see. So one stock that we really liked back in 2015 was Alibaba. And one thing that made me really take notice of Alibaba was a bearish call that Barron's had made. There for a while, I just started looking at Barron's articles. Anything they didn't like, I bought. Facebook, they said to sell it, it could go to $15 when it was 20 bucks. We bought it. Same thing here. Back in September of 2015, Barron's wrote an article talking about JD's maybe gaining share. We assessed the growth rates between those two companies to see that it wasn't quite accurate. They compared it to a slow-growing eBay, the price multiples, and that really brought up something. That was actually a good comparison, because you looked and you said, okay, you've got Alibaba trading at 25 times earnings. You've got eBay trading at 20 times earnings, yet Alibaba is growing 30%, and eBay is essentially not growing. So lockup expiration, we didn't consider it a good, we didn't consider it that big of a deal. The company was still growing very quick. It was cheap. And we used this and to look at the stock as an evaluation. And in September of 2015, Alibaba was trading at $60 a share, maybe a little bit above. So here we are at $170. All of those concerns are no longer relevant. That's just an article now that, one of the many that are thrown out there to the public that you forget about. But in investing, an article like that, people can take seriously. At HadePlatform, we don't just throw a lot of volume at you. We're very particular in the stocks that we're buying, the stocks that we like. We're not just throwing a bunch of ideas out there like mad money and hitting buy, and then you forget it 2 days later after the fact, because you just keep bringing more volume. We're very calculated with the stocks that we buy, the stocks that we like, and Alibaba was one of those. And at a $437 billion market cap at 34.5 times forward earnings, this is a company that still has a lot of potential. It's still growing fast in the Chinese market and is very quickly expanding into new markets. And, there's definitely things out there that I think are better opportunities. We do not actively own Alibaba, but it is a stock that we would watch, we keep on our radar, and if it starts to dip and a lot of those, same concerns start to pop back up, it's one that we would buy in a minute.